All right, ladies and gentlemen, welcome to another episode. Hope everyone's doing well out there. Let's see what the comments got going on here. Mark Cal R said, I remember when Bitcoin was 900 a coin. It may not get that low again, but buying on the lowest dip sounds like a good plan to me. Absolutely, man. I mean, hey, dollar cost average in, dollar cost average out. That's what most people forget to tell you guys. Dollar cost average out as well. You need to portfolio rotate, buy other assets. But we're in a situation where I think we're definitely kind of going into a deflationary spiral, it looks like. That's what it looks like to me. You know, we talk about inflation, this, inflation, that. Yes, we're having price inflation right now, absolutely. But like assets are deflating. The stock market prices are heading lower. We're about to see real estate head lower. Crypto's heading lower. That is deflationary. You know, so 9.1 definitely not going to be good for the price of crypto. Absolutely not. Go Panama. We're going to talk about that today. That's what I want to really highlight on today's episode. I was actually shocked. A lot of people were shocked at this 9.1% inflation, CPI inflation number we got this morning. You sold at the top, huh? I got to see receipts for that, Go Panama. I need to see Twitter. I always hear people saying, yeah, I sold at the top. I got to see receipts. You got to show me some receipts, brother. Top of the morning, good people. Let's stay focused and blessed out here. Absolutely. Ghetto Crypto. Thanks for tuning in. Todd is in the building. Thanks everyone for tuning in today. I tried to play my I'm having issues playing. I have issues playing this little 30-second intro. But anyhow, we're gonna get started today. Let's go ahead and start with the sponsor, Mex Global. Mexi Global. I am dropping you guys $25 worth of Bitcoin and their additional $1,000 worth of bonuses as well. So check them out, man. They're really doing a lot to bring awareness to their exchange. They're not really present here in the United States. And that's what their initiative is to do. Get more U.S. citizens trading with them. They're one of the biggest outside of the United States. So they have a lot of great rewards for you guys. One, of course, $25. I'm airdropping to you guys. Link in the description below. Follow the directions, and you can get your $25 worth of Bitcoin. And if you want to even go further, they're up for claim up to $1,000 worth of futures bonuses as well. All right. MexCglobal.com. It's actually mexc.com. Link is in the description below, though, if you want to participate and get that $25 worth of free Bitcoin. All right. Let's see what we got here. We got a lot of comments this morning. Pretty active in the building this morning. Let's see. Ghetto Crypto says they might as well raise hell if that's the case. Yeah. Yes. Smash those like buttons. Smash those like booties. Sean C is in the building. Thanks for tuning in, Sean C. Always a great supporter. Go Panama so I can show you the half acre of land I bought with USDC in January. Hey, that I hear that, brother. I hear that. So you know you're doing the right thing, Go Panama. Rotating your profits out of crypto. Not all of them, but some of them. You got to rotate out. Buy land like Go Panama is doing. Buy watches, or buy something that's going to hold value. Even though the watch game has been getting hit hard, and we're now seeing that there is a correlation with the crypto prices and people buying luxury watches and other luxury goods as well. So we're seeing a huge correction in the luxury watch game. CPI numbers were high, but gold commodity prices yields are pointing at deflationary forces getting ready to take over. Exactly. That's exactly what I'm saying. I am so on point with you on that one. I am on the same page, Sean C. Deflationary. And listen, that's the a central bank's worst nightmare is deflation. That is their worst nightmare. They want to avoid that at all costs. All right. So let's go ahead and take a look at this chart. And I literally just did this review yesterday with you guys. We were like right here yesterday. Okay, we broke back down. And so this morning we saw a move back up to that trend line. And guess what? There was a rejection, a clear rejection there. Not a good sign. There was a lot of whiplashing going on when those CPI numbers came out this morning. And we're going to get to that in a second. 9.1% inflation CPI print for the month of June. And this is the lowest we've seen, guys, since 1981. That is crazy. 40 years ago. So this is a monumental moment for us. I'm going to explain what this means for your crypto portfolio, what this means for your equities portfolio. I even got to, throw in there real estate, because real estate is affected by this as well. And maybe we'll go through that. But yes, we did see a clear rejection. That to me is a sign that we're going to probably head lower at this point, guys. And I told you yesterday, I talked to Mr. Michael Saylor. He said he's doing well over there at Mickey D's. He thinks he's overqualified for his position right now, and that he'll be regional manager very soon. So good for him. Good for Mr. Saylor. Let's talk about this first article, which is not about the inflation, but more drama with Celsius, guys. Oh my God. I found this out yesterday, and we're going to get to this point about this person right here, 0xB1. I'll explain how he, she, or them, or they, I should say, fits into this Celsius story. So it looks like now we've got Vermont Department of Financial Regulation saying that they think that until recently, Celsius was operating without regulatory oversight. But in addition to that, they're saying that Celsius is deeply insolvent. We talked about, I've heard numbers of like 5 billion in the hole, or someone wanted to purchase them or give them a $5 billion loan, a credit, right? And they refused to show their financial documents, their balance sheet. So they basically denied or rejected the $5 billion line of credit. So that lets me know you got a $5 billion line of credit ready to go and clear you up. But all you got to do is show your financial records. They didn't want to do that. That lets me know something is going real bad over there. Something's going sour. Ghetto Crypto says 7 years before my time. Ouch, that number is cold. Rejection at 200-day moving average. Sailor is screwed. So we had the 200-day moving average there as well. I didn't notice that. I don't use moving averages, but that is not a good look. Go Panama. Let me see. Let's bring in Default. He's in the building. One of our contributors to the channel. What's going on, Default?
What's going on, man?
So we got a rejection at the 200-day moving average, huh?
I think that's the weekly. Is he talking about the 200 weekly moving average?
That's even worse.
I know.
I didn't know about that.
Yeah, I mentioned that on the on that last video I posted. It technically looks terrible. We're breaking down out of that rising wedge on the 4-hour. Unless you miraculously, get pumped back into it, it's the next area is like 15,800. That's the measured move. The market just looks bad right now. But
yeah, he said weeks.
Yeah,
200.
I saw that. I turned on I don't use the moving averages like that, but I turn them on, just to get a idea where they're at, because sometimes they are significant. Like the longer term moving averages are more significant. But I was also looking at the, everybody's focused on crypto and how bad that's looking. I was actually about to do a video on the traditional markets,
Mm.
and I was looking at the VIX, man.
Mm.
The VIX is kind of consolidating.
I haven't looked at the VIX in a while. What is it trading at right now?
It's at 27.
Okay, so that's still fair. That's like actually not
It's not that bad.
not that bad. It's not showing panic yet, so that's concerning for me because we haven't even seen VIX at what was its height when we had
COVID,
the COVID thing. It was like
it was 85.
80. Yeah. Okay. Mm-hmm.
So, but since the COVID crash, it's kind of been like a rounded bottom. It kind of looks like it's like accumulating. If it was like another asset, it looks like some accumulation is going on. And like right now, there's like a symmetric triangle being formed, and the symmetric triangle actually completion date is like in October. If it whether it breaks up or down, I think it's gonna just because the market conditions, I think it's going to break to the upside. It's like a 60% move to the upside at least. And I was going to do a video break it down of what I'm seeing. Like basically, there's probably going to be a crash sometime in the fall. It looks like if things stay the way they are, if the Fed keeps their policy, which they seem like that's what's going to happen. There's I'm hearing like rumors of like a sovereign debt crisis. Like there's a lot of other countries around the world that have some debt issues. And if you look at the dollar right now compared to other currencies, like especially like the yen and the euro, like everybody knows about the euro, but the yen, like it looks like these other currencies look terrible. So these other central banks are going to have to make a decision whether they're going to, drastically heighten their rates, or are they going to continue to let their currency, depreciate so much against the dollar. And with, I think Germany, their inflation report came out today as well. I think their inflation was like 13% year over year, or it was like for like the last month, it pumped to like 13%.
Wow. And also to that point, talking about sovereign nations and the geopolitical, or I should say economic things going on in other countries, we have Canada raising a surprisingly 100 basis point, I believe today, or was it yesterday? So they've just raised their interest rates 100 basis points, and they're saying they're trying to get ahead of this. So you're right. Like everyone is trying to adjust and not be left behind, and basically caught with their pants down.
Yeah. If they don't raise their rates, their inflation is going to be, unsustainable. And so you see places like, it's a smaller country like Sri Lanka. They took over the capital, whatever. Those are the reasons. Like when your inflation becomes, unmanageable and people can't afford their basic needs, you're going to have social unrest. And so it's like, what do you do as a central bank? Do you raise rates, or do you allow the inflation to kill you? Like, this seems like the world is heading towards a significant downturn.
Yeah, and the thing is, it's not about like where we go in prices. It's about the sustainability of it. If we sustain certain prices, I think that's where the real damage happens, right? If inflation stays at these high levels, or if the price of crude oil goes to 200 a barrel, it going to 200 a barrel is not the issue. It's more the issue of if it stays and sustains at 200 a barrel, because then that just throws off everything.
Yeah, I was just looking at oil actually. It looks like there's like a descending triangle starting to form. If it breaks like $93, I believe, I got a target like $68. But commodities have taken this past month. They're down mostly are down like 20%. Whether it's been your oil or your copper or even your food. I know there's like a lot of rhetoric out that we're going to have a food shortage in the fall and stuff like that. And I just I don't listen to narratives. I just look at the charts. And if the prices, if food prices are down 30% in a month, and they're still tanking, I don't see how there's going to be a food shortage. It's not reflected with the price. So there's just a lot of narratives, being spewed right now online. But I think it's just people are realizing that these prices were elevated, but they're starting to tank now. But it doesn't look good. Like the overall economy and stuff doesn't look good, and that's definitely not good for the crypto.
Yeah, man. I wonder what people are going to say the narrative is for crypto now. Like, I mean, you've been a supporter of the channel and been contributing for a few months now. Like, for years I've said crypto is not a risk on asset. I was saying this in 2017, 18. Crypto is not a risk on asset. Crypto is not a risk on asset. And now we have it here. It's showing its card as definitely not a risk. Well, it is a risk on asset, I should say. I'm sorry. It's not a risk off asset.
Yeah.
And now it's showing its card. And yeah, man, I think we go much lower. And that's why I couldn't tell people where the bottom was on crypto, because it's all data dependent.
There's too many variables right now.
Too many.
I mean, I had the target 12 to 14K for months, but I did a video. I was like, maybe it goes even lower than that, because it's just longer term right now. I mean, the fact that we did hit the previous cycle high, that was significant. The fact that you never did that marked the end of the bull, that macro bull.
Run. Yeah.
Everybody talk about the macro bull. That was the macro bull from
yeah, you're right, bro. You're right.
To November. That was the macro bull. So
you're right.
And that's what I've been saying. Like,
it is different this time. People say it's different this time.
Exactly.
Listen, 9 years in this crypto space. I told my man, go check out Debate Crypto. I go on their channel often. I said, it feels different. I'm worried. I'm more worried than I've ever been this go around in crypto, because it is different this time.
I'm not personally worried, because I've been, I'm kind of took off the hat of like trader and moved on more to developer side. But I would be more optimistic if there was more, if there's more people using the technology. I think that's what's hurting it right now, is the fact that it would be less speculative if you had like stable platforms, and you had platforms that were actually like, other than the speculative value.
Yeah, we had that opportunity to do that in 17 and didn't. People got overzealous and got overtaken by greed, because we were starting to build things in 17, 18.
I mean, it's kind of the same this cycle. I mean, there was the building of the decentralized finance, but as we're starting to see, that was really backed by traditional finance. That's what it seems like. A lot of the loans, a lot of liquidity is from the legacy financial system. So, I mean, if there was just more like, there's no company, like there's protocols, there's the technology, but there's not really a real use case yet, like a stable use case.
That's the thing. I feel there are many use cases. It's just that the demand isn't there for it.
That's what I mean. Like, it's not a stable. There's not enough like users to maintain a certain price range, and so this is why you get these large swings, and you get all this panic, because there's no
need for it. I mean, there's no demand for it.
Yeah.
So, I always say this, default, Bitcoin works at $100,000 a coin, $50,000 a coin, $10 a coin, $1 a coin.
Yeah.
It works, right? So the dollar value on it, of course, there are a number of things that make up that value, but we can't be confidently we can't be confident in saying we know where the value, the true market value of Bitcoin or any of these other cryptocurrencies are. We can't be confident in that. It could be much lower and range somewhere around there. Now I know, the coin, it's only 21 million and so on and so forth. But we have to keep that in mind. We really can't say we surely know where the price of Bitcoin should be, because we've been in a crazy money printing, money machine go brr since 2008.
Yeah.
We haven't seen Bitcoin in a, Fed taking liquidity out of the market.
You haven't seen how it responds in a recession.
We haven't seen where it responds in a recession, right?
You're seeing it somewhat now. One thing I would say about what's the value, the true value of Bitcoin, I would say the only way you could maybe gauge it, is by what the miner's cost is. What's the network cost? Yeah. Other than that, I mean, everything is just how somebody feels and how much liquidity is in the market.
That's true. And the miner's cost is what, 7,000, 6,000?
That's what I've heard. They'll have to shut off after 7,000, or, I mean, if you get that low, I mean, of course, there's other, I guess, smaller operations that are going to be cutting off a lot sooner. So, I really just think we're just starting as far as this price depreciation in this market.
Yep. Yeah, I agree. And, one thing that Todd brought up here, I don't know if you can see the screen, is he says, I think it really threw off everything was back when oil went negative. When oil went negative, I said, this whole system is completely broken. I couldn't believe we saw negative oil, crude oil. Was it WTI? Was it WTI or was it the other one? I can't remember. I can't remember. Yeah, but it went negative, like $40, which it doesn't even make sense. How commodity price?
It was the futures contract.
It was the futures contract.
Yeah. I mean, that was, everybody talking about the Great Reset. That was the Great Reset for oil with the negative price. It just
makes no sense. Go Panama says that he feels the Fed should be raising in its next FOMC meeting, should be raising 100 basis points. And we're going to get to that, because I actually think that's what's going to happen. Or even more.
See, the thing is, and I've mentioned this on Twitter, the Fed is the way they're combating inflation is they're just going to kill demand. And so in order to kill demand is people got to be out of work. And so really until the unemployment rate pumps, they're not going to, reverse course, because they have no excuse other than the data they're getting. And the data they're getting is it's really a lot of the inflation is they're using last year to this year. They're comparing from last year to this year. And I mean, yeah, inflation is elevated, but by the time the new data comes in, they're already behind the curve. So what's probably going to happen is they're going to raise rates too much. And they were talking about they're trying to have a soft landing. That's just impossible.
Yeah, it's impossible. It's impossible, man. It's impossible. Yeah, they're just jawboning. They know that, but they had to talk for the markets and act like they have control over everything, when really they've actually been wrong, almost 100% of the time, which is insane. How do you have all of these elite, doctorate, smart people in economics, and they just can't ever seem to get it right? They're always behind. I agree with you. I think they're going to keep raising interest rates. And I think I hear you correctly. You think they're going to continue to raise interest rates until they see unemployment rates rise.
Yeah, significantly.
And it's significantly because that is the last metric at this point why we're not saying we're in a recession. I mean, I think we're in a recession, but I'm saying technically speaking, they won't say we're in a recession until they start to see the unemployment rate tick up, or I should say employment head lower. That is the last indication. The other two are already showing us that we're definitely in a recession.
Yeah, I mean, I believe the Atlanta Fed already revised their GDP outlook for the last quarter, and it was negative 1.9% or something like that. So technically, I mean, it's been 2 quarters going by even their estimation. So technically, we're already in a recession towards that metric. But employment right now is still, low. Like unemployment is so low. So until that rises, I won't, I don't expect them to change their course. And that probably will be sometime later this year, when unemployment finally starts to tick up. And it's a lagging, indicator as well. So it doesn't, that's why I keep saying this doesn't look good at all. And I still see people optimistic, like, yeah, this is the bottom here, not just for crypto, but for stocks as well. Like they just think it's, the printer's on, like that's not what's going on right now. And I don't think a lot of people understand the fundamental side that since November, because that's when they announced they were changing the course. Like the game has changed. And that's why like these markets get ahead of the game. And that's why you're seeing the prices of these risk-on assets losing so much.
Yeah, I definitely see, at minimum, I see us, and I didn't feel this way 6 months ago. I thought 20,000, maybe a little bit below, like where we are now, and then we would see a nice bounce. But I definitely see us probably heading towards our long-term trend line for Bitcoin, which would place us around 8,600, 7,700, somewhere around there.
That's the 886 from the low to the high, all time. That's around the 886. So, I mean, I wouldn't be shocked, and that's near the, I guess, the minor where they're going to shut off or not. But if you get below that, I mean, if you stable, you can get below it, but if you stay below it for a significant amount of time,
right?
That's
the staying below it. It's the time period, not the actual prices that we hit. It's how long we sustain those levels. But again, if things from a fundamental or geopolitical or geoeconomic perspective continues to head in this direction, and we have some global sovereign debt crisis again, yeah, we don't. All bets are off on what we know as to be the price behavior of crypto, because we were entering a new era.
Yeah.
So
yeah.
I want to go ahead.
I was just going to say, imagine $1 if that happens. Like,
oh, it's going to be like 100. It's going to be like 150.
Yeah. Yeah.
You know what I'm saying? Dixie's going to be like 150, 160. I can't believe we're at parity. Euro's at parity with the dollar.
Yeah, the euro's going to all-time lows.
It's going back to 80 cents on the dollar.
Yeah.
That is insane. So again, we're seeing the death of the euro. That's been, people have been saying that for how many years now? Default. I've been hearing that for over a decade.
Easily
over a decade, definitely. So let me get your opinion about what's going on with Celsius, man. Oh my God! So now we have I didn't never even heard of them. The Vermont Department of Financial Regulation. They're saying that they've looked into Celsius and they feel that they are deeply insolvent. And not only that, they're saying most of their assets currently held by Celsius are illiquid, with the chances of them of the firm repaying the debt obligations very low, according to the Vermont-based regulator. They go on to say, what was funny to me is that they're just now coming out with this. It's like, no shit, Sherlock, you're a day late, a dollar short, $5 billion short. Like, this is something that's already been known, you know. And this is what's wrong with governments, man. They're so big and there's so much bureaucracy. They move at a snail's pace, so they could never be ahead of the curve on anything.
Yeah, I don't put the fault at the government. I mean, this is Celsius' fault.
Oh yeah,
they.
I'm just saying, warning the people of Vermont.
Yeah, I mean,
you know, they're just now coming out with this.
I mean, honestly, this might be unpopular, a position to have, but to me, entities like Celsius, they're centralized digital banks. They're not. To me, they're not like. It's not crypto, traditionally crypto. They're just banks masquerading
playing with crypto.
Mm-hmm. Yeah, they're using crypto as they're basically like they're a middleman service, and so to me, which might not be popular, but they need to be regulated because they're posing as a bank. It's just if you just put your crypto behind your business, you don't have to be regulated like a bank, and they made bad bets. And if you have money on Celsius, it's basically another Mt. Gox, probably worse, and you probably won't be seeing your money if you ever get any type of redemption of your funds for years. I think that's the reason why when FTX passed on bailing them out, that was a clear sign that they were deeply insolvent.
Yeah. And so the latest one we're finding out is Simon Dixon. Thanks, Paul, for this. Simon Dixon had $6 billion ready to go, and Celsius was not willing to show their books. So that just lets you know it's over. Yeah. It's over. And so once that fundamental news hits the block, that's yet another leg down in the crypto markets. So, yeah, we've got a few more fundamental things, ladies and gentlemen, to pretty much like work through in the crypto space before we can say we're at a base where we can start heading higher, or at least build a base for a while before heading higher later. You speak of regulation. Well, Vermont is saying that the regulator has also indicated the firm is not licensed to operate in Vermont and had been involved in offering unregistered securities via its crypto interest accounts. So there you have it. I mean, they were already in trouble. Do you recall last year? This may have been the cracks, the first signs of issues with Celsius, to be honest with you. But we're still in a bull market, so it was, they were able to cover it over. But do you remember when like all these various states started like blocking their residents from using Celsius and all of that?
Yeah, they basically, you had to be a credit investor to be using the platform. Because like I said, to me, well, I wouldn't go that far with the regulation, but it was operating like a bank. It was basically you deposit your crypto onto this platform and you receive interest. And they control all your deposits, your withdrawals. They control the whole thing. Like, that's not a crypto platform. That's a digital bank platform, just using digital currency. I remember hearing about Celsius like two years ago. Actually on it was like one of like Spaces or something like that, or not Spaces. What was the other app? The chat app, whatever. Clubhouse.
Clubhouse, so, okay.
Yeah, somebody was explaining then how Celsius, like they had all their, they had a life savings in Celsius, and it was like a revolutionary technology. And I was just like, it sounds like a bank. and I was like, I looked into it, and I'll just never use this because, I mean, I got the email last week for Mt. Gox. I still got, I still haven't been redeemed from funds from 2013, 14 from that platform. I learned my lessons from that. So it was just terrible. This is a terrible platform. I don't see the value in those type of platforms. in crypto, honestly. I mean, maybe from a liquidity perspective, because it did bring a lot of liquidity. It brought a lot of VCs in. Um, it became like a model of their type of platform they were trying to, basically model after. But really, it's not a crypto platform to me. It's just a digital bank. It's literally
Yeah,
just a digital bank.
I have to agree with you. One additional fundamental thing we have to work through, ladies and gentlemen, Voice Crypto brings up Mt. Gox trustee releasing their Bitcoin funds as well. Now, I don't think the whole 130,000 Bitcoin is going to hit the market at once or even at ever, okay? But a portion of that will. So you're going to have that be another supply of Bitcoin hitting the market. So I can name about 4 fundamental things that I think will or should have you pause on really putting your whole bag in at these levels. Dollar cost average, maybe, but a dollar cost average to me would be literally like 10 to 15% of whatever total you were going to buy. That's how small of a dollar cost average it would be for me.
Yeah. I mean, there's going to be, pumps. There's going to be like
Of course.
miniature, like, upswings. It's not going to go straight down, but
No.
it's just go all in at these levels right now with the economic climate. It's a little bit too risky right now still. If, the trend changes, then I mean, yeah, like you saying DCA, but I would say like 1-2% maybe.
Mm.
And like really small. And then
Mm-hmm.
just see what happens as far as like, economically really first, and then see what's happening like fundamentally with these other platforms. Like who's the next shoe to fall, honestly, because we don't know who invested in Celsius and what domino will fall from that. I know they're paying back a lot of their loans and stuff like that. They're trying to like pay back a lot of their creditors, but who knows? I mean, the Luna thing, it took a few weeks to really start to feel the effects.
Well, the funny thing is, Luna is probably the reason for all of this.
Yeah, yeah.
If you think about it, right? Like, it kind of stemmed from Luna.
I mean, the first domino was definitely the Fed changing its policy, turning off the spigot,
Oh, right, right.
and
Yeah, if you want to
then
look at it that way, right.
liquidity became a lot more
Mm-hmm.
expensive, and so
Mm-hmm.
all the gains and all the
Mm-hmm.
over leveraging, all that is being exposed right now. So
Crypto.com just lowered their reward rates, earn rates for the 5th time. That's
BCH is, oh my, Bitcoin Cash, Bitcoin.com is Bitcoin Cash, right?
no, that's Bitcoin.com.
All right, but just yeah, Bitcoin Cash. I was looking at that chart. It looks, man, and
It's the real Bitcoin though, bro.
I mean,
And I'm not saying that to be like
no,
sarcastic. Like, I really
no,
do think it really was the real Bitcoin.
they try to follow the original,
Yeah.
idea.
Mm-hmm.
I understand that,
Mm-hmm.
but it doesn't matter about the idea. It matters where the money went, and the
Right.
money went to BTC,
Just like
and
ETH
so
Classic too, right? ETH Classic was more
exactly,
closely, aligned to the ethos, the original ethos of
and the money
Ethereum.
went to ETH.
It went into yeah.
So
Mm-hmm.
it really doesn't matter what how people are perceiving. Well, it matters how they perceive it, but it doesn't matter about the original intent. It matters where that the capital
Follow
flowed.
the money, ladies and gentlemen. Just like in history, the ones who wrote history, they write the history. The ones with the money picks the winners.
Yeah, and it's not about morality. It's not
Nope.
about what was right or wrong. I mean, the same morality, but it's just a matter about did you were the victor or not. And BTC so far is still the victor, even though, I mean, really it's the same protocol from a decade ago. And it has a few, like what, 2 updates. I think the Taproot update is like the new thing. It's supposed to have your
Yeah, Taproot just happened maybe a year, 6 or a year ago, whatever.
Maybe that would
Uh,
be the spark of the new run next time because they're supposed to be decentralized or DeFi platforms on Bitcoin supposedly,
it's no
but
way.
it's still too early for even speculate in those terms. But I man, it's just this game like the one thing I want people to
And
realize.
ladies and gentlemen, default has been around the crypto space since 2013 as well, right?
Yeah, late
Late,
2012.
late 2012. So he's not a newcomer. His opinions are coming from a place of experience in this space. So just want to throw that in there.
The one thing I just want people to learn is like, and a lot of people like every cycle, more people get suckered in
Yeah,
really into the market because they're not around when the opportunity is really there. They
right.
get in when it's near the highs. Is to really stop listening to these people that are like it's obviously they're shilling you these projects. Like
Mm,
whether it's Elon, it doesn't matter how much money they are, how famous, it doesn't matter. Like
mm.
if they're coming to you and you look at a chart and the chart is a hockey stick and they're telling you to buy, do not listen to that person.
Mm-hmm.
Like they're not they're there they want you to be exit liquidity.
For them,
They're
absolutely.
making you a bag holder.
Right,
Like they're
right.
like I just hope people realize that, and that's why I was trying to warn people like literally since November, like just literally the top near the top. And I wasn't just saying it about crypto, I was saying about the like every market. Like it became a market where you're if you're a trader is you can make a lot of money. But
Yes.
if you're a hodler,
Oh man.
you're gonna lose a lot of your value.
And back in 2006, 17 bull run, I used to always tell people about mental health and having a healthy financial mind or investment mind. And that's critical because what happens when you hodl, it does more damage to you psychologically than it does financially, in my opinion. You know
Yeah.
what I mean? People have seen figures that they've never seen in their lives poof disappear, and 9 times out of 10 they're not going to get that back with the same bag that they have. They would have to strategize and actually know what they're doing to do that again on the next bull run. So a lot
Yeah,
of people
because
got rich by mistake
like
over the last 2 years.
if you're hodling BCH right now, right? I think it's important
Mm,
to like really understand this somewhat like just look at a chart. Look at the 2017, 2018 high and then look at the high for this cycle. And I've stated this: if your coin did not make a new cycle high, if you got an old coin and it didn't make a new cycle high, this cycle is pretty much dead. It's dead. There's no new money that's going to flow into it.
nope.
Um, and we could talk about like the old coins. Like I was looking at the chart, the whole world coins, the
World coin. Shout out
red
to World
coin,
Coin.
feather.
Feather. Yeah, Feather coin.
Look at those charts.
Those are altcoin 1.0 season. That's season 1.0, ladies and gentlemen.
Yeah, like look at
Never
those
to
charts.
return.
They're dead. They're
They're
dead
dead.
trees. Like Bitcoin, diamond, Bitcoin,
Mm-hmm.
gold. Like that was 2017. Right? They're dead. And so, with just that knowledge, if you're holding one of those coins and you're expecting to see an all-time high, the likelihood of that is very slim. I just haven't seen it. And
And shout out to Reggie. You know, but I told people who were Veritasium fans, like hodlers of Veritasium, sell that shit. It was $500 a coin.
you're never gonna see
People
that again.
had millions of dollars worth. Where is it at today? It never got past its last cycle high. So we're showing right now Bitcoin Cash, guys. It touched all the way up to almost $4,000, $3,700. That was the Coinbase
Yeah, the Coinbase
A
rig.
listing or whatever, right?
Yeah, when they were
Rig.
inside trading. And,
Right.
Coinbase it got to like 8K,
Oh
nine
my
thousand
God.
dollars. I remember that because I was trying to arbitrage. Um, that when that happened, but they didn't allow you to deposit on the platform
Yeah, this
because
coin is down 97.4%. It's never coming back.
it's
I,
done.
okay, I can't say never. I definitely can never say
The,
never.
the likelihood of it ever going to a new all-time high is very slim, unless there's some type of radical development on the platform.
If Satoshi himself comes out and says, "No, Bitcoin Cash is really the real one," that's it. I mean, that's it, bro.
Unless they build something that brings users, because they're on I mean, Bitcoin Cash is on a lot of they're on PayPal, they're on a lot of the more traditional side platforms like Bitcoin, but you just don't have a use case. And so if you don't have a use case and your whole argument is, well, we're the original, we're following the original white paper more than BTC is, nobody cares. And is reflected in the price. Nobody cares about that. If they
Yeah,
did, then you would be more valuable than Bitcoin right now. And so,
right.
I mean, I know some people that are like were really BCH stands, and I've been telling them for like years, like, yo, it's just, but they won't listen. But the price will reflect what the market thinks. The market thinks BCH is just not that valuable. This is what
Yeah.
it is.
Yeah, so really quickly, I want to just touch on one other point in regards to the Celsius situation, this drama going on with Celsius. This is worse than a soap opera, if you ask me. I learned this yesterday. So apparently, Celsius was giving this guy, 0xB1, this pretty popular Twitter guy. He's got over 125,000 followers. They were giving him money to speculate on different DeFi strategies, and he pretty much blew it up. Okay, so another layer, they're giving this guy. I guess he is. They're saying that he's the co-founder of KeyFi.
Mm.
So many people may have heard about KeyFi in some of these articles that have been rolling out about Celsius. But yeah, they were giving him money to do whatever he was doing. And again, in a bull market, everyone looks smart. You can't make a mistake because everything goes up. So, this guy, I'm not saying he's dumb or anything because he definitely has some skill sets to be, creating these different DeFi strategies through KeyFi. But yeah, he's definitely part of this whole situation. Now, I want to get to the main crux of this live stream. Inflation surges to 9.1% in June, hits a new 40-year high. We haven't seen this since, I think, 81, November of 81. Default, man, what is your take, man? Like, we kind of touched on it, but how do you see this playing out? Is next, since we've seen this number, do you see the Federal Reserve doing a 100 basis point move like Canada just did? Or do you see something like 125 or 150? Kind of give us your take.
It's very complicated because most of the inflation, and I've been arguing this for like over like a year and a half now. The inflation was mostly a supply issue. It wasn't because they were printing a lot of the dollars. I mean, that's one of the. It did have a effect, but it wasn't the main cause. And so, and I've heard this argument where if the Fed keeps higher interest rates, what will happen is, since there's a supply issue, if say you're a business and you supply, a certain product or a commodity or whatever, at a certain point, the Fed hiring interest rates is actually a negative effect on inflation. Will actually make inflation go up more because you're disincentivizing people to invest in improving the supply chain because they can't, they to take out, maybe they have to take a loan, or they have to get some type of business credit to improve their whatever, improve their supply and improve their supply, and they can't because credit is too expensive.
Mm-hmm.
And so you're kind of de-incentivizing people to invest in that aspect. So it could be actually a negative thing for inflation. I really don't know if these rates are going to be effective enough to bring down, the core issue. Is basically to sum it up.
Before you jumped on, we were talking about, and I was saying that we actually are heading into a deflationary spiral. Like, it looks inflationary, but there's some aspects that are deflationary, and that's the central bank's worst nightmare.
Yeah, definitely. I think from that perspective, I could see it more on the, like, as I said, like on the from a central banker's aspect, like the sovereign debt aspect. But still, there's still supply side issues. So unless the Fed can really destroy demand for consumers, I don't know how of course, like right now, the prices are coming down. But I don't know how long that would be effective, because these are supply side issues, really, in its entirety. That's where the inflation came from. And like, if you look at lumber, last year, like 2021, lumber was like, I think it was like 1,500 per. I think it's like, I don't know if it's barrel or whatever the metrics are, but there were some supply issues with lumber before the pandemic. And they, with the pandemic, with the shutdown, those issues like basically got worse. And that was the reason for why lumber was so expensive last year.
Mm-hmm.
And when those supply side issues start to, when they started to get more lumber in the market, you can see like lumber has been back to like normal levels,
right?
Basically. And that's with other, commodities going up, a couple 100% within the last, I don't know, like 6 to 9 months. And so
let me ask you this. Would this have happened? I'm going political here. Would this same environment we're in right now with inflation where it is, would this have happened if our previous president was still in office? Now, many things presidents can't change, especially like market economic forces, right? Those move kind of on their own, or more so influenced by the Federal Reserve and their lack of responsibility for things. So do you think, though, we would have seen the same scenario play out if we didn't have Brandon in the office?
Yes, it probably you would still have inflation, because really the shutdown really destroyed the supply chain.
Yeah.
And so it was that's been the main issue. And I think what would be different is the response to the inflation.
Right. Yeah,
So
that's what I'm kind of getting at. So the response would dictate a different outcome too, though, or slightly different, wouldn't
because
it?
if you remember back in, what was that, 2019 or 2018, when the Fed they higher interest rates in, I think it was 2018. Trump put pressure on the Fed to cut interest rates.
Yeah.
And so there's no, like, we're just speculating. Who's to say that if Trump was still in office, he would just basically tell the Fed to, keep rates low and let inflation take over. We don't know.
Go Panama was saying that Trump was pushing QE, low rates, and stimmies first. He sure was.
Honestly, like, COVID was just a black swan event. I don't think you could change no matter.
I don't think so. I don't think it would have deviated much either. I will say I think there would have been a different outcome on the energy side, meaning our gas prices and stuff. I think because this
I
administration
agree.
is trying to go green and all electric and shit, and
Not
we're
even the
sending
green.
barrels over to China, and all that stuff wouldn't have happened.
That, and also there would probably be no Russian war. There would be no
There
war in
would
Ukraine.
have been no Russian war, though. I don't even think the war has much of an impact. I'm gonna be
No,
honest with you.
it doesn't have that much impact for the United States, but it has a
Right?
lot of impact for Europe.
Yeah, for
And
sure.
so,
It could. Do you think that's a reason why we're seeing parity?
yep,
Mm.
their
Euro
economy is in
euro
shambles
parity
right now.
to dollar.
Yeah, their economy is in shambles right now,
Mm.
and so you definitely wouldn't have. Well, you can't say definitely, but I don't think you will have the Ukraine war, and so maybe inflation wouldn't be as rampant as for energy costs, and also, Ukraine supplied a lot of food for, I believe, for Europe, and not just for Europe, but like other countries surrounding, like in the Middle East and stuff like that. Um, so maybe that would be different. So maybe the inflation wouldn't be as
Yeah, it still
prevalent.
would have been high. I just think it probably wouldn't. It would be a couple deviations off from where we are today. Because I mean, Brandon is just clueless. That administration is
Yeah, but
just
I mean, he's
not only him; it's the whole
he
team
does
because we already know he's not running anything
he
anyway.
has dementia. Like and I've been saying
Right,
that since 2019. Like
right.
he he was just the person the Democrats latched on to because honestly, in the South, he was popular with mostly elderly black voters. And in a Democratic primary, if you win the South with black Democratic voters, you're going to win the primary. That's the whole key. That's why Sanders lost in 2016. That's why he lost in 2020. Um, I mean, this time in 2020 it was a little bit different, but because they had kind of like all ganged up in the last second. But it's a joke administration. I'm not expecting anything they do to quell the issues. Income
Will we see
inequality,
a red wave this coming midterms?
maybe in the House. I'm not so sure with the Senate, and I don't think that really. I mean, it matters, but the damage. This just needed to be like. I'm not trying to get too political, or whatever, but this whole system is a
They just
scam,
need to
man.
clean house. Yeah,
Yeah,
they need to
the
clean
whole
house.
system's a scam.
They need to clean house for sure. Yeah,
Yeah.
I agree with you there. Um, yeah, so kind of just summing up, guys. I mean, again, inflation 9.1%. It's you gotta expect a pretty strong and aggressive reaction to this print by the Federal Reserve, and so that ultimately, to sum it up, I think is going to have another negative effect on your portfolio. So cash is king. Be ready to buy at lower prices. Dollar cost average, of course. I'm saying 10%. Default is saying 1 to 2% of your overall dollar cost average stash. Uh, you know, you pick. We're not giving you financial advice, but definitely
It's
be ready to buy at lower prices.
yeah, it's gonna be a process, man. It's
Right,
gonna take time,
right,
and so until like even this technically, I mean, maybe on the weekly there might be an advantage, like a slight advantage, but there's just nothing that's screaming right now that we'll be seeing higher prices, not only in crypto, but just any risk on asset right now. Like I said, there will be bounces, but I, it's I don't think it's going to be anything to sustain. Like it's not for a long term hold right now. I mean,
right.
we haven't even. I think really, I think there's a. I'm just speculating, but I think there will be a crash sometime in like the fall. Like, well, not the fall, like the. Well, yeah, this fall, towards winter, because it just you have the economic conditions for a a one of those classic 20 to 30% pukes within a short amount of time, and then who knows what will cap it off, but it just seems like it's setting up for that unless something dramatically changes. And I just, we were just talking about political. Like, they're not really doing anything. They're not really doing anything to help this situation for anybody.
Make sure you guys, real quick, public service announcement. Let me get those thumbs up counts up, guys. I think we got like maybe 20 or so. Got about 51 people watching right now. Take the time right now, hit that thumbs up, get more people aware of this conversation that Crypto Blood and Default are having. All right, we want to definitely get more people aware of the knowledge that we're dropping, and trying to help everyone in this chat room for sure make the right decisions. It's not financial advice, but it's definitely, you got to get information from various sources so you can make your own informed decision. I'm going to leave you guys with this one. This is kind of off topic, no crypto. But this is what's to come, ladies and gentlemen. BMW starts selling heated seat subscriptions for $18 a month. This is what's coming. Okay, all these, we've been talking about inflation, costs, to run your business is heading up. Energy costs is heading higher. This is going to affect the bottom line with every company. So they're going to start doing shit like this. You're going to have to pay $18 a month to have heated seats. Can you believe? Man, Default, what's your take on this, man?
That sounds insane, but honestly, I mean, they renting shoes now. Like I just started to realize like there's that Afterpay, and there's like other companies that are basically, what was the term it used to be? It was like lend or like loan. So, I forgot what the terminology was, but it's really like they're not fundamentally fixing income inequality. So
right,
they'll just give it band-aids where
exactly
you can't afford it. So just pay a monthly subscription for this service. And
what are they gonna do next? Have me pay like $5 a month to actually make the gas pedal work? You can only turn right. If you want to turn left, pay me $4.55. Man, this is crazy. But again, this is what people. I'm sure many of those listening have heard of the term shrinkflation. This is a form of shrinkflation, in my opinion, where they're giving you less, or they're giving the same thing, but you got to pay for more features, right? So it seems like you're getting something that you've always gotten, but actually you're paying more for it. So this is pretty much insane. So a monthly subscription to heat your BMW's front seats costs roughly $18, with options to subscribe for a year, $180, 3 years, $300, or pay unlimited access for $415. So all you luxury drivers out there, get ready. You're gonna get microcharged to death. Crazy.
That's really
$10 to get that airbag to work, ladies and gentlemen. You need it. It's gonna save your life. Oh my God, man. Default, appreciate you jumping on with me at the last minute there. Make sure you guys again hit that like button, subscribe, check out Default's market analysis videos. He's doing those weekly. And also check out all the other contributors on the CBTV network. All right. Again, hit those thumbs up. We need them. All right. It's your boy Crypto Blood. I'm out of here. Holla.